Okay, we're going to go ahead and get started. Welcome, those of you that are joining us. My name is Jennifer Young. I'm with University Credit Union. Joining me today is Taylor Riley. He's one of our mortgage consultants. And we're here to present mortgage Q&A. We just want to make sure that we give you an opportunity to ask any questions, general questions, or specific questions to mortgages. We want to make sure we do have a little bit of an outline, but we want you to, just some housekeeping items, make sure and type your questions in, because as those questions come in, we're going to be addressing those so that we're trying to answer what you have, what questions you have, not just general information for us. So hopefully that will give you an overview. We do have a few questions that we've had emailed into us previously, so we will answer those. But again, if you have a question, type those in, and we'll get to those as they come in. We're going to go ahead and get started and just give you an overview. The first question that we wanted to address was, how do I know which product I need? And I'm going to have Taylor answer this. How would you know what product, or if I was a borrower coming in, how do you know what product they need?
The first thing that I would do is sit down and ask a series of questions so that we can be able to identify which direction you're going, what you're trying to accomplish in the short term and the long term. What product do you need? Is it a purchase, refinance? Are you looking to upgrade? Are you looking to remodel? And so we go through and we'll ask the questions, what kind of credit score and history do you have? Have you had a bankruptcy in the past? Because that's something that we may need to address. If it's a purchase, what kind of down payment are you going to have? Is it a family transaction where we can be able to do a gift of equity? Are there gifts involved? Are you putting 20% cash down? Are you a first-time home buyer? So our 100% financing program is available. We'll ask these questions so it can kind of direct us where it would be best for us to go. We talk about job history. Are you self-employed? Are you starting a new job? Do you have commission structure that we need to identify how much income we can be able to qualify, because we have to have 2 years for those? Are you a first-time home buyer, a second-time home buyer, or third, fourth, fifth? Is a co-borrower a first-time home buyer? That opens up different avenues. As I talked about, the building or renovating, if you're doing some sort of refinance, what are your financial goals? Are you looking to retire? I'm of the belief, I'm 35 years old. I think that my generation really needs to have their home paid off by the time they retire. If they don't, I believe that they're going to struggle in their later years. So the financial goals of being able to get their home paid off, or at least set up avenues so maybe a reverse mortgage is available for you when you reach that age, if that product's still there. So we'll talk about the financial goals of possibly doing a 15-year loan or a 20-year loan so that we can be able to put you in the best possible position moving forward. If you're already in retirement, we can be able to talk about different options that are available for you, and possibly short-term living situations where you know you're only going to be in your home for a couple of years. A lot of times people are concerned about the closing costs that can be on a loan. We have no closing cost loans. Also, we can build the closing costs into the rate so they're not added to the loan. Sometimes that can be more beneficial if you're going to be in the short term. So these are all things that we can be able to sit down, ask questions, and explore and see what avenue the answers take us down so that we can be able to find the perfect or best loan situation for you.
So one of the questions that is being asked is, how much of a down payment do I need? So what options do you have, Taylor, for what kind of a down payment do I need? If I'm a first-time home buyer, what options do I have?
Yeah, if you're a first-time home buyer, there's a couple different options that we can be able to take a look at. One thing that we'd want to know with that is, what is your credit score? If your credit score is below a 700, an FHA loan typically is going to be the best loan option for you. It's going to be the cheapest monthly payment, and the FHA program is a really, really good program to be able to help people get into homes. Whether you have a 580 credit score or an 850 credit score, they treat you the same, so they're much more streamlined. So that's something that we'd want to take a look at. Also, we do have the 100% financing program that the credit union rolled out late last year. It's gained traction. It's a fantastic product. In the past, we've had a 3% cash down for first-time home buyers. This 100% financing program that's available really has been superior to the 3% option. If you're more worried about what the monthly payment's going to be, we still have the 5% option that you can put down to be able to save some monthly payment. But also, you can put as much down as you want as a first-time or a second-time home buyer. You're not limited to these types of products.
One of the questions that we get often as well is, how much do I need to expect for closing costs? What are closing costs?
So there's a couple different things that we have with it. You'll pay an origination fee to the financial institution, and then there's basic closing costs that you're going to have your credit pulled, to have the appraisal done, monitoring to make sure that the taxes are being paid with the county each individual year. And then you'll also have your title fees that are going to protect you and the financial institution to make sure that there's a clean title on a home that you're purchasing. So those would be the fees that are associated with it. Most of them are based on what the loan amount is going to be. So as the loan amount is more expensive, sometimes the fees can be a little bit higher. A lot of times people will think that 3% is how much, or 2.5% of what the loan amount. That's not always the case. We'd want to sit down. It only takes us 30 seconds to be able to go through how much your closing costs would be. But depending on the loan amount, the percentages will change. So that's not a good rule of thumb to use in my experience.
So do I, as a borrower, do I have to pay everything, or are there any other options for closing costs?
It depends on the type of loan that we're doing. If it's a purchase, the seller can be able to contribute X amount of dollars or a percentage of the purchase price, depending on the type of loan that we're doing. So that's something that we will talk to you and explore to help you understand what you can be able to expect. Also, I always recommend that you talk to your agent to find out the marketplace and the dollar amount that you're looking at, because that sometimes will determine on what the likelihood is that you will have a seller pay for some of your closing costs. Once again, as I talked about earlier, you can be able to take a little bit of a higher rate to reduce your closing costs. So we'll look at all your options and find out how much cash you have down, how much cash you have available, and make sure we find the most comfortable situation for you. Also, we're not set in stone when we do the application on what type of product or how much cash down you're going to be placing towards that home. If you find something that maybe needs a little bit of TLC, we can look at the option and switch from maybe a 5% to a 3% and put the less cash down. Or if you need to have your closing costs paid for and the seller's not contributing enough, maybe we can be able to increase your rate by 1/8%, which would change your payment $15 to $20, but could give you an additional 0.5% to 1% to put down towards your loan. So we can look at lots of different options to find out what's going to be best for you in your situation.
See, those are really helpful. I think that's really helpful information. And those are great questions. Question that came in, do I need a real estate agent involved in the transaction? Great question. We always encourage you to go ahead and have a real estate agent involved, just simply because it gives you somebody representing you. If you go to a home that's listed for sale and you don't have an agent, that seller is covering those costs of the agent. The seller pays for the real estate agents, just so that you understand that. You don't cover the cost of that. And so as a buyer, we think it's really important to have an agent involved so that you have somebody that's helping you and representing you. You don't have to have a real estate agent involved. You can try and go through that negotiation on your own, but the seller is still going to have to pay those fees. If they don't pay it to your agent, then they would just pay it to their original agent, the listing agent. They'll have to pay a listing and a selling part to that agent. So the money still gets spent. You might as well have somebody involved that's going to be helpful to you. And if you don't have a real estate agent that you're working with and you would like a referral, we are happy to help you with that. We're happy to give you an idea of, we usually give you 2 or 3 names of who you can reach out to and work with, people that we've had experience with, and we'd love that opportunity to help you out there. We've got a couple more questions coming. So what types of loans are available? I've heard that out in Tooele, there's a special program that would have allowed me to refinance in rural areas. What other types of special loans are available? You probably are referring, Gwen, I'm hoping that's a really great question. I'm hoping that you're referring to a USDA loan. There are USDA loans for rural areas, but what we have found is in specific areas, including Tooele, we don't really need those. And sometimes those loans, depending on what your circumstances are, they tend to be a little bit more expensive. If you're in a position that you've got better credit and that you've got a down payment saved, sometimes they're more expensive. And so we really run those scenarios. We look at the different comparisons and see what's going to be best for you. But there are programs that are available, even not in rural areas, but even in the cities. There's gift programs and grant programs. It's up to you as a borrower to research those and look into those. They're tending with the market right now, as busy as the market is and as aggressive as the market is, they tend not to be as popular. Those programs tend to come out when it's a little bit tougher market, tougher to find buyers. They come up with more, they get a little bit more creative with what they offer. So hopefully that answers your question. That's a really good question, Gwen. Thank you. So let's go to the next question that we run into. So how do you compare lenders? We get asked quite often, maybe not asked, but we get compared quite often to other lenders. And some of the things that we really think are important, that we feel strongly that are important, are making sure that you have a level of comfort and a level of trust. We really pride ourselves at the credit union. We're very transparent. We're going to be very open with you with what fees are what. We try and give you the very best deal. Our relationship with you as our members is an overall relationship. We're not trying to just get your mortgage. We really want to have an overall relationship where you feel comfortable and want to bring us not only your mortgage, but your car loan or your Visa account, or we want to help you save to put your kids through college. We really want the overall relationship. And so we make sure that whether it's that we're working with you currently with your mortgage or with your car loan, that we want to make sure that you understand you can trust us. We want you comfortable. We're very competitive with our rates and fees. Our rates and fees, if you find something somewhere else that's better, please let us know, because we will fight for you. We're not above going to our executive team and fighting and trying to get you a better deal. So but we also, in that process, we'll also do our due diligence. We'll also make sure that we're current and that we're competitive with the rates in the marketplace. Servicing is a big deal, and I'm going to have Taylor cover servicing. I feel like it's an important issue. So what is servicing and why is it important?
Along with our relationship that we can be able to build long term, I feel our servicing is our best asset that we have here at the credit union when doing a mortgage. A large portion of our loans are sold. However, we retain the servicing on them, so you'll always make your payment to the credit union. And we are a smaller financial institution, and so having hundreds of millions of dollars of loans for mortgages isn't really obtainable for us. But we've been able to provide a product where we can be able to service those loans, so you'll always make your payments to the credit union. It helps us be able to not only start the relationship in basically the 30 or 45 days from the time that you find a home till when we close, but we can be able to continue that relationship until your home is paid to a zero balance. And so the servicing aspect, you'll always make your payments to us. We take care of your escrow account if that's something that you want. I've been very, very impressed while I've been here on how easy it is for us to be able to take care of those situations. We get on the phone, get an email out, and usually those types of things we can be able to get fixed within a 24-hour period. So you're not going to be sent to a member call center and have a different person every time. Each of the mortgage consultants' cell phones are available for you to be able to call us at any time so that we can be able to get your questions answered. We really feel like we can be able to give you a level of service that nobody's going to be able to give throughout the time that you're doing your loan and then afterwards as well.
That's a really great point. Taylor pointed out, a lot of people have the concept, the understanding or the perception that credit union employees only work from 9 to 5 or 9 to 6 when the branches are open. And mortgage lenders have to have a different schedule. And so you'll find with the mortgage consultants at the credit union that we're available when you need us. And so you do get that personal touch, and you do get that extra accessibility. You'll get not only emails, but you'll get cell phone numbers so that you'll be able to reach out to us personally when you need us. So if that's during working hours, that's great. And if it's after hours, we try and make sure that we're accessible for you. So hopefully that gives you some things. And those are important things to compare when you talk about lenders. You want to make sure that you do. And probably the number one on all of that is the trust, making sure that you can trust that you're going to be treated and that your information is going to be handled very professionally, and that you'll be happy with the overall process. So we're going to go to the next screen. We have a couple of questions that have come in. So I'm going to ask Taylor, should I choose an adjustable rate mortgage or a fixed rate loan? What's the difference between those two things?
It really just depends on what you're looking for. So the adjustable rate mortgages will have a lock period for the first 5 years with the products that we have available. I was just speaking to a gentleman this morning. We were going through 15-year options. The rate for the 15-year for what he was looking at was in the low 4% area. He made a comment innocuously as we were talking that he was planning on having the loan paid off in 5 years. That perked my ears up quite a bit, because I turned to him and asked him if he had thought about an adjustable rate mortgage. They have a misconception that those are the types of products that cause the meltdown in the late early part of the 2000s, and that is just not the case. So what we were able to do is then turn our attention to an adjustable rate mortgage where it was fixed in the first 5 years. The rate for that right now is in the mid 3s. So we were able to calculate how much the interest savings would be for him in the first 5 years, and it was over $10,000. So the adjustable rate mortgages are something that are available. It's something that we can be able to find if it works for you. It's not always something that's going to be in your best interest. If you have a really, really low rate, you're planning on being in a home long term, I probably wouldn't recommend it, but everybody's different in their situation, where they may only want to be in their home for 5 years. They may be remodeling and selling the home. Their kids may be going off to college, so they may be retiring and moving elsewhere. Those are things that we can be able to take a look at and make sure that we're giving you all the options so that we can find the best product that works for you.
Thank you. Again, this is part of the process that we go through at the credit union, is to make sure that we give you lots of options, just like what Taylor mentioned, that he listened and he heard the member mention something, and we were able to come up with another option for this member. That's what our job is. Our job is to make sure that you get lots of options, and then it comes down to that you're the one that has to choose what's best for you. We can give you options, and we can give you our opinions and different ideas, and then it's up to you to choose, because only you are going to know what's best for you. Documentation. You need to understand that we're going to go through a process, and we're going to verify information. We're going to verify income information. What if I haven't been on my job for 2 years? Is that an issue? What information do you need to verify income? We're going to ask you for just general information, a couple of years W-2s and a couple of pay stubs. And if that pay stub is for a week, we're going to ask you for 4 of them. We want to see 30 days worth of pay stubs. Just something to show what your earnings have been for the past 30 days and up to the year to date, what you have earned. And then the W-2s show us a previous history. We're going to verify residency to see, are you here legally? Are you here on a visa? What information do we need to, we are able to do loans for people that are here legally. And in some situations, it doesn't take much to get that verification. So we just more than anything, we're going to ask you for information, try and document, and help make the process a little bit easier. Where are the funds for close? Whoops, go ahead. Taylor has.
The residency. So we are extremely lenient with people to be able to get loans here at the credit union. As long as you are living in the United States legally and you have a credit history, we can be able to most likely do a mortgage for you. Not a lot of lenders are able to do that. They require that you're either a permanent resident or you are a US citizen. That is not the case for us. And so what we can be able to do is people who are here on student visas, on work visas, as long as you are here legally and you have a credit history, we can be able to do a mortgage loan for you. Even if your expiration is in 90 days and you start the process now, we can be able to get that loan done for you. So it's one of those things where we found that not a lot of financial institutions are able to help those individuals. And so we like to get the word out that we can be able to help those individuals if they want to purchase a home, as long as they're here legally, that we can be able to take care of that for them. It's been a wonderful product where we've helped quite a few people in the last few months be able to get into homes that didn't think that was a possibility for them.
And we run into that, actually, I was going to say, we run into that a lot more than what you would think. We run into that quite often, especially with the association up at the University of Utah. We run into that quite often. So we are able to help you in that situation. We're going to verify money for closing, and we're going to look at your credit report. We're going to look at your credit report in detail. Just like Taylor alluded to, we're going to look at the history, if you've had a bankruptcy, if you've had collections. If you have terrible, terrible credit, we would love to help work through that and see what's causing the problems and help you identify that and help you get it in line. And if it takes 3 months, 4 months, you've worked with people upwards of a year or two.
Yeah, that's where the relationship comes in, because of our history that we have. Most of the mortgage consultants that we have here at the credit union were loan officers for the financial institution before that. And so I did consumer loans for 7 years at a large credit union. And so we're able to look at somebody's credit and say, okay, right now you don't have a credit score that's high enough to be able to get a mortgage. However, I believe within a year, we could be able to do A, B, and C to be able to do what you're looking to get done. And so we can be able to set up a plan of opening up a line of credit, of opening up a small credit card, properly educating you on how to use them so that we can be able to boost your score up. To be able to get your credit score from a 560 to a 620 is very, very easy to do. It takes a little bit of time and effort, and we can be able to help you do those sorts of things. So that's where our background, our relationship, everything that we can be able to offer is better than what a broker would be able to do for you.
Okay. We're going to move forward to the next question. The process of a mortgage loan. How long does it take? What's the time frame from start to finish? How long does it take to put a loan together?
We've implemented new processes. So when we're doing a purchase, we've really been able to get them done within 15 to 20 days. So if you're on a shorter time frame, I don't see any reason why we wouldn't be able to get that done. When the refinances do take a little bit longer because the purchases take precedent, but we'll be able to go through and get your loan done in a timely manner for you. One of the questions I always ask is how quickly they'd like this to be done with what they're looking to get done, and are they going to be heading out of town anytime soon? A lot of times people are doing remodels and they want to get started right away. They already have their contractor picked out. We understand that. We'll go through and get this done in an expedited time frame. Sometimes it's beneficial for people to actually refinance a primary residence to purchase an investment property or to purchase a second home. We can be able to treat those as purchases, and we can be able to get a refinance done in the 3-week window that we need to. So we can be able to get them done very, very quick. Sometimes things do hold us up, but we'll be in constant communication with you so you're understanding where we're going to be at. But we'll try and get these done as fast as possible. Big misconception. Well, it's really not a misconception, but a stigma that the credit unions are really, really slow on their mortgages. There are some credit unions that are like that. That's one of the things that I like about our process, is that we've really modeled it after a broker process on the back end, and I feel like we've delivered on that to be able to get everything done in an expedited manner.
I love it when Taylor says that the refinances take a little bit longer. Our average turn time right now for refinances are 21 days. We take this very seriously, and we work really hard to make sure that our process is quick and as uninvasive as possible. There are certain things that we have to ask for, and there are certain things that we have to do, but we try and make it as streamlined as possible. And so we really try and align our service with serving you and achieving your goals and making sure that we've identified those up front so that the process will go smoother overall. The process of doing an application, you need to know that you have a couple of options. You've found us here on our website, so y'all know where to find us there. You can go on our website and you can do an application online, or you can reach out to any of the mortgage consultants directly. If you call the main line for the credit union, the 801-481-8840 is a mortgage line. Anytime you dial that 8840, you're going to reach a mortgage consultant. And so you can either reach out to us personally, you can do it online. It accomplishes the same thing. But once you do it online, you'll be reached out to. A mortgage consultant will reach back out to you and say, okay, listen, let's go ahead and get started. Let's identify what's your goal. Let's walk you through the process, and they'll help you through. There's a question. So we talked about the time frame. What about rate locks? We have a question on rate locks. When do I lock, and what does it mean to lock in? What does that mean?
Yeah, it depends on the type of product that you're going with. When you do a refinance, typically we'll lock at the time of application. We may need to, or you may want to look at it for a couple days, but typically those rate locks are done in a very, very short time frame. On the purchases, we can't lock until you're under contract on a specific home, but we can be able to go through and look to see how many days it is until the time frame. We can tailor the locks. If we do a shorter time frame, sometimes the pricing is a little bit better. So if you're doing a normal 30-day, we can get that lock done. Also, when you're building a home or with a builder or something like that, sometimes they'll talk to you and say, okay, we're 60 or 90 days out. We can be able to do locks that far out, and sometimes the rate's not any different than on a normal lock. So I think it's important for the mortgage consultant to keep in contact with you, answering questions, for the member to be asking questions so that we can be able to find the best time that you're comfortable with locking. This goes back to the trust and respect that we have for you and you have for us, so that we can be able to make sure that we're finding the absolute best situation for you to be in time and time again.
Okay. Another question comes in. How does the process work when we sell our homes and we buy a home at the same time? Good question. We have that a lot right now. The most important thing I can tell you is timing is everything. So if you've been fortunate enough to have a buyer for your home and have found a home that you can go under contract, it's going to be a timing issue. If you can work it out to where you can close on the sale of your home and close on the purchase of the new home and not have any overlap, then kudos to you. That's not typically what happens, but many times if you've got buyers and the seller of the home that you're looking at, if you can coordinate those, you can work that out. If not, then there may be some gap in between that you may have to find a place to hang out or move your stuff. I know that that's the most disliked thing, is having to move 2 or 3 times. If you sell your home and move out and move into something temporarily, and then you have to move again into the new home, it is a difficult process, and it is difficult to get those timings. And do you have any suggestions for that, Taylor?
Yeah, that's why an agent's going to be so important for you when you're making your offers. If you have a home that you need to sell, let your agent know that this is not, you can't qualify for both homes. And that's where we can be able to go through and find the product that works best for you. If you can qualify for both, it's possible that you can buy the new home, move into it, and then put your old home on the market. And so we can be able to do that. If you need to sell your home for down payment and everything like that, that's where the agent and the expertise that they have is definitely going to be there. We can be able to find ways around just about everything. So we'll work with you. If that's something you need to do, that's not a problem. It may take a little bit more time, but we can be able to get you taken care of on it.
Those are tricky. It's a good question. Thanks, Gwen. Another question, how long would I need to wait if I filed a Chapter 7 bankruptcy almost 2 years ago? I would be a first-time home buyer with my fiance. That's a great question. Thank you. 7 years on a Chapter 7 bankruptcy
Well, it depends on the type of product. So each product doesn't have the same waiting period. So if we're doing a conventional loan, a Chapter 7, we have to be 4 years removed from it. That being said, if we go with the FHA loan, it's only 2 years. So we can be able to take a look at the different time frames that you've had and the loan products that are available for you. There are situations where we can be able to cut that time in half, although those are very rare that we can be able to do that. But that's where having the conversation with somebody to be able to say, okay, this is the time frame that we're looking at for you to be able to get qualified. If you did have a bankruptcy 2 years ago or a year and a half ago, we'd want to look at the credit to see where the credit is. There are some things that we can possibly do to boost the score up if we have to wait some time. So if we can be able to take care of all those things and put you in a very good situation when it becomes available for you to be able to qualify for a mortgage, we can be able to do that. And so that's why I always tell people, if you have questions or are thinking about buying a home, then you should get in touch with a mortgage consultant so we can be able to evaluate your current situation, see if you're ready to go. And if you're not, we can give you a time frame and what you need to do in the amount of time needed so that we can be able to put you in the best possible position.
Good question. Thanks, Ashley. Appreciate it. We're going to go to the next screen. The next screen shows you just some things to keep in mind. There are a lot of things that you need to keep in mind as you prepare to purchase a home. You need to be aware of that we're going to look at all these things. And so just things to consider: acquiring new debt, making sure that you're really careful in getting pre-qualified with talking to a mortgage consultant before. Talk to a mortgage consultant, see what your structure of your financial situation is now and what it needs to be in order to purchase. Make sure that you've got your job situation squared away. Make sure that you keep us posted if there are any job changes. If you're going to be changing jobs, make sure that it's in the same line of work. And again, communication with your mortgage consultant is going to be a big help. Money is always an issue when you talk to lenders, and we're always going to talk to you about, how much do you have on hand? Do you have cash on hand? Is it in the bank? We always ask, is it in a financial institution or is it cash on hand? A lot of people don't understand that cash on hand is great, but we can't count it and we can't use it. So if you come to us and you say, we've got $10,000 shoved in the mattress at home, it's just not, we can't use it. So we really need those funds in an institution where we can verify them and that they would be seasoned, a couple months. Credit cards, we're going to ask you, we're going to look at your credit history. We're going to see what's going on with things. And we're going to double check when we talk about, funds in your bank accounts. If there's big deposits or deposits that are there that are out of the norm for you, we're going to ask and find out where the source of those funds are. We do go through a lot of things. We ask a lot of questions, and those questions are not meant to be invasive. They're truly meant to be an opportunity for us to identify if there are going to be anything pop up along the process. We make sure and ask a lot of questions so that we can make sure that the process is seamless for you. If you've had credit issues or if you've had a divorce, we're going to ask about those things. We're going to ask for the documentation on those types of things. So just consider those things as you're going through the process. Anything that you want to add to those?
Yeah, our number one thing is to be able to get you into a home and get your loan closed. So when we ask all these questions, we're really trying to avoid pitfalls and be able to see what's in front of us so that we can be able to deal with it. If you have cash at home, no, we can't be able to utilize that, but there's different ways that we could possibly be able to utilize that. And so we can be able to think outside the box. I pride myself on being able to think outside the box. And so we can be able to go through and say, okay, we can't use it this way, but maybe we can be able to do A, B, and C to be able to use it, which is more comfortable for you. So just talk to us so that we can be able to help you. That's where our expertise is, to be able to help you get from wherever you're at right now to the end goal of being in a home or being in a different loan so you can finish the things that you're looking to finish.
Okay. We've had a lot of really great questions come up, and I hope that they've been helpful. I'm sure that we could spend another half an hour answering more questions. I would encourage you to reach out. Here's a list of our mortgage consultants. The credit union web address, again, you all know where to find us. You've already found us on that. But again, the main number, 801-481-8840. you'll reach any of our mortgage consultants, and they are welcome to answer anything that you've got. Again, there will be a lot of questions that come up. Reach out to us. Let us help you through the process. Thank you so much for taking time today. Thank you, Taylor, for joining us and answering all the questions. You can find Taylor at our Brickyard branch and reach out to him and talk to him about some of the questions asked today and let him help you through the process. Again, thank you so much. We appreciate your attending. Have a great day.